All right, what's going on? Back with another currency breakdown. Straight to business, getting into it. Kind of forgot to show y'all one thing dealing with the United Kingdom and what their policy people were saying, but we'll get into that another time. That's fine. Right now, we're going to be paying attention to straight about the euro. So, I mean, there's a lot going on here, but overall, I mean, it started to kind of weaken here. So it's going down. Taking it down to the daily, you know, this high right here is going to be protected, and so it formed a lower high. So so that's been going down. Excuse me, y'all. Um, my cat, right? So anyway, that's been going down. Right now, it's really ugly. If you're really looking at it, it's pretty ugly. But overall, I feel like the euro's going down. It's in consolidation, but we're breaking it down to the 4 hour to get a um, magnifying into what's really going on here. So price came here, a high, the low here. It came up, tested this level here, double top, pretty much went down from here. Boom, right? Even a change of character. Looking at this level right here, there was a change of character. So boom, broke it, right? Then of course a proper retest. Now it's headed back down. I feel like it's gonna head down to this level. And so though even euro economy has been improving, ultimately it's still weak. So getting straight to the fundamentals. Jesus. Manufacturing sector and the euro economy. Let's take a look. So services is big in the euro economy, and that really upholds the euro. And so services was pretty weak. Um, in general, it's okay, but it's still weak, right? It's dipping. My thoughts is that services, of course, holds a big portion of the euro area. So I'm still monitoring, seeing pockets of improvement, but overall still weak, right? I'm not looking at PPI because that was in December, just looking at January numbers. Composite. Now, what the article says is that the U.S. is expected to impose tariffs on European exports. Despite the improvement, manufacturing remains under pressure. Rising input costs, that drives up the inflation, but driven by a nearly 7% increase in oil prices. Pose risk for firms already facing weak demand. So this is not good. ECB, which means European Central Bank, easing path could also be complicated if inflationary pressures persist. So they looking at all of that, right? They got some things they got to deal with too. I don't want to butcher the name. Noted that over 90% of Eurozone exports go to markets outside of the U.S., limiting the immediate impact of potential tariffs. So, though even we know that, keep in mind while keeping up with other data, once that hit in, it's going to be bad for the euro unless some things change, right? So I'm keeping all this in mind. Construction have been improving, okay? So we see that here. Small improvements in certain areas of the economy, including this reading. So that's cool. That's look good. Zoo economic sentiment. I mean, really still weak, but overall have been improving. So seeing pockets of improvements, but overall still weak, right? Global recovery is weak. Projections, I'll wait until that comes out in February. Now, loans to companies they need it. So I'm paying attention to all this because they need it. Loans to company, economic sentiment, okay, pretty strong. Industrial improve, okay. Still got to understand this, but I think I understand it, but I don't want to go over that. Services sentiment, this is pretty bad actually. And this up, so that's pretty bad. I feel like another decline here will be a sell-off in the euro for sure, but I'm monitoring. You do see little pockets of improvement, but it's still overall weak. Economic sentiment, an article said, provided further clues on whether consumers and businesses are adjusting expectations for looser monetary policy. Provided further clues on whether consumers and businesses are adjusting expectation. Okay. All right. So consumer sector, this is old. Now loans to household improved a little bit. But so loans to household in this environment right now, consumers need it. Consumer confidence, it's in the negative, deep in the negative, but it got a little bit better. Still overall weak, right? Some consumers are starting to feel some relief, but overall still bad, really. Like I said, loans to household could bring some relief to consumers, so that makes sense. Labor sector, I think all this is old. Yeah, all this is old right now, so we can't go into that. Balance of trade. Now no, this is old. Never mind, this is old. However, I'm still going to be looking at it. Now, again, we've seen before, one of the articles said with 90% of Eurozone exports go to markets outside the U.S., limiting the immediate impact of potential tariffs. However, we didn't heard that Trump said they will slap some tariffs on Euro. We'll be monitoring that, see how that actually, looks. Central bank sector, now they had one in January. They cut rates. Let me see. I think this is old, so I'm not going to go over that. I think this is new now. A struggling economy would typically benefit from more accommodative monetary policy, meaning cutting rates. So with them cutting rates, and with their economy actually struggling, typically this would be a benefit for the euro. But inflationary pressures could restrict the ECB ability to cut rates further. So what that means is that economy really needs for interest rate to be lower. But since the central bank's main thing is price stability and maximum employment, I don't know if Euro has a dual mandate, but their main focus is what I'm understanding is inflation. They need inflation to go down. So with their main focus of inflation, and technically, not trying to be funny, not the consumers, though even they said that tool should help consumers, right now they're not going to be cutting because they're dealing with inflationary pressures. Keep that in mind, right? So inflation, stubborn. Look at this. Stubborn. Core, stubborn. It's looking pretty bad. Will make it hard for ECB. This is my thoughts. Make it hard for ECB to cut. European Central Bank also monitoring the delaying of underlying inflation pressures month over month, since 90% of Eurozone exports go to markets outside the U.S., limiting the immediate impact of potential tariffs. Now, one of the articles said inflationary concerns have reemerged. We see this in the data right here. Stubborn. Core CPI. Upside risks to inflation remain from elevated energy, if food prices, strong wage growth, and persistent service inflation prevented ECB from committing to deeper rate cuts. They're looking at this. So what do you think we're going to look at? This article said everything we need to take a look at of what the ECB have in mind. And this is what I'm going to be monitoring. That's why I had to underline this. They're going to be looking for that, right? Let me see. Now, looking at the notes, Trump has vowed to impose new additional tariffs on numerous other categories of foreign goods, including microchips, oil, and gas, steel, aluminum, copper, pharmaceuticals, including all forms of medicine. He also said he will absolutely slap tariffs on European Union. Right? Consumers' demand is weak. The accounts highlighted several lingering uncertainties that warranted a cautious approach going forward. Right? Pretty much they're going to be data dependent as well. Policymaker emphasized the need to maintain a data dependent stance with no room for forward guidance at this stage. The ECB also flagged geopolitical tensions, fiscal policy concerns within the Eurozone, and global trade uncertainties as downside risks to the growth. This is what they're looking at. This is what they're monitoring that will affect the economy. And we can look at it too, to position ourselves to make better trades, period. which typically also imply downside risk to inflation over longer horizons. So we'll see how that'll go. Though even it's like, okay, hey, we're getting affected here. This is gonna hurt the euro, right? But also our focus, if this does happen, this will also help with inflation actually lowering too. My mindset is how will the ECB actually interact to these things if this actually happens? And Trump has not put that pen down as of yet. So um yeah. Let me see. I'm not gonna go too much into. Let me take a look at where I'm at right now. I'm not gonna go too much into it. These are some of the ECB, what they're looking for. They have raised concerns involving global trade, right? He warned that a full trade war between the U.S. and China pose a more significant threat. Okay, I wonder why is that, right? With China accounting for 35% of global manufacturing capacity, broad trade restrictions could flood European markets with Chinese goods. Okay, so what did this mean, right? It will create a dual challenge, right? Deflationary pressures from a lower price imports, okay, all right, but contractionary effect as European producers struggle to compete for China goods, right? So that's what they're worried about. Outline non-key elements, including transition from cheap debt refinancing to higher rates, the forward-looking impact of expected rate cuts, global term premium pressures, evolving bank lending conditions. So that the loans to household and the loans to companies matter in this economy. The overall response to of consumption. So it's a lot. It's a lot. I don't want to this thing starting to do a lot. Higher energy prices, declining competitiveness, labor shortage. Like I keep up with everything. I don't know. The more people, if they, y'all take a look at it, y'all want to know more deeper depth into the fundamentals. I don't mind breaking it down, but I'm not trying to bore you to death. Yeah, Eurozone demand remains weak. Tariffs, negative effect on the economy. Cautious regarding rate cuts. Citing renewed inflation risk from tariffs. We've seen that. Trade friction pose fresh threats to price stability. Yeah, it's a lot, y'all. So keep up with it. Just wanted to show you this one. Overall, I'm looking for it to go down. So hopefully I ain't speed to that too much, but that is the breakdown of the Euro economy. See you in the next video. One love. Peace.